Lazard's global head of M&A, Mark McMaster, is with me now. You know, it's interesting, Mark, because you did see for a while there borrowing costs being higher, really impacting a lot of markets, but it shook off those fears this year with intense borrowing for deals. Do you think that continues with expectations changing around rates?
I think people will continue to borrow to do deals, but one of the things we're seeing a lot of is the comeback of all stock transactions. In 22, they were about 10% of total volume. Today, they're over a third. And if you look at the biggest deals that are done so far this year, more than half of them are all stock combinations. So it's a way to achieve a combination without levering up. Where you can share the synergies proportionately between shareholder bases, and it's a more effective cost of borrowing for many corporations.
It's interesting. You look at a market like today, and on one hand, you feel volatility could be bad for deals. On the other hand, lower stock prices could be pretty decent for deals. Do you look at it that way?
I do over the long term. It's been quite a run. The S&P is still at or near all-time highs, and so people's currency is a very valuable commodity in doing transactions today.
Well, one big question mark has been antitrust as well. On one hand, you've seen deal volumes jump back meaningfully, even with the threat overhanging large-scale deals. Do you think that the types of deals we'll see this year have to be smaller to avoid that kind of scrutiny?
Well, they have to be well planned. So I think right now the participants understand the rules for antitrust, and I think if the facts are on your side and you have high level of confidence, you can pursue and get a deal done. So I think the antitrust regime right now is stable, and I think participants know kind of that they have to do a bunch of the work up front to get a deal done properly.
Well, it's interesting because the question I was embedded in there too was also about size. Do you think that 2024, by the end of it, will be defined by the mega merger or something else?
Probably something else. It's too early to say. You know, we're only a couple of months in. There are an awful lot of big deals, as I mentioned earlier, so far in 24. And I think big deals still can get done. They'll face antitrust scrutiny, but as you know, there's been a couple of cases that have given the issuers and the transactors some confidence that they can get things done today.
Well, the other thing you've been working on a lot at Lazard is the closeness to the private capital industry, both on the financing side as well as to just regular way private equity deals. If there's any case to be made for deals that are not mega deals, do you think private equity can start playing a bigger role here?
Well, private equity is in a bit of a logjam still today, right? So there's a ton of portfolio companies that still need to be monetized, and there's an awful lot of firepower that has not yet been deployed. So right now the private credit markets are working well, but the traditional credit markets are just starting to open up. So I think if we get a rate cut or two, and the debate has shifted not from are rates going to go up, but when are they going to go down and by how much? So a couple of rate cuts, I think we start to see the traditional financing markets competing with private credit, and I think that will open up the private equity logjam.
Now that's pretty fascinating, because does that happen whether you see one rate cut or 3 rate cuts this year, you think?
I think it happens after a rate cut or 2.
So you think about the role of private equity, and it's not just this idea that they have all this dry powder. You've seen a lot of companies look to do spin-offs or exit certain businesses kind of in this more challenging economic environment. Does that continue?
I think simplification will continue. I think it's a trend. It's been going on for a long time. I think investors really prefer pure plays for lots of reasons. And so you're seeing the remaining conglomerates continue to simplify, right? Just GE's announcements, 3M's announcements. I think that trend continues.
How much can it really continue? You kind of mentioned some names that were already looking to it as well. Do you think you'll see some non-traditional players start to enter the market when it comes to spinoffs?
I think it will continue for a while. I think you can always become more focused, more of a pure play, and I think when you think about the acquisition side of things, that's where you want to grow, right? You want to grow in your core competencies. So I think it will continue for a while.
The other thing you mentioned here about all stock deals is it implies many public companies doing more and more deals, starting to use their currency. How, by and large, have investors been rewarding those deals? Do you find that more often that they're more receptive to them?
I think investors are receptive to deals that make strategic sense, where the price makes sense and the synergies are shared kind of proportionally between buyer and seller. So as long as it makes sense and you structure it properly, investors will perceive it well. I do think in this environment, an all-stock deal has the advantage of not leveraging up the balance sheet, and I think investors are rewarding that.
Now, let's talk about sectors as well. Where do you think that there's the most opportunity right now as we kind of close out this year? We have 3 quarters left.
So last year and this year, the big sectors have been technology, healthcare, industrials, and energy broadly defined. This sector, I think, in addition to those four, which are still quite busy, we're seeing an increase in consumer, and we're seeing an increase in financial institutions. And so I think those sectors will be more active this year than they were last year.
What do you think is driving that?
Fundamentally it's growth, right? So investors require growth, and whether it's organic growth or inorganic growth, investors are going to reward it as long as it's consistent and management teams are perceived as being very good at it.
Is there something defensive about this space as well? You think about the consumer, and they're finally having some troubles, as you see in the market so far. Do you think that companies are looking to bulk up to get ahead of that?
I'm not seeing that yet. I'm not seeing the defensive nature, so I'll stay tuned to it.
When you think about those types of deals, do you think that they're mostly strategic, or is that where private equity steps in as well?
It's going to be both. It's going to be both. As the bigger companies simplify, pieces come off, private equity can step in and compete with other strategics. But there will be, I still think, a lot of strategic to strategic combinations.
Bring us behind the process. Now you have strategic buyers, and finally, it looks like maybe after a rate cut, private equity buyers also coming into the market. When you're in a process, how competitive are deals becoming now? Do you find that these auction processes are finally coming back to the surface in meaningful ways?
I think right now private equity is still very disciplined, and it's very hard to get through a commitment committee on a private equity deal, particularly if they're fundraising. I think right now private equity is more focused on add-ons to their existing portfolio companies as a way to bring the multiples down, and are a little bit more hesitant to do another platform acquisition. So yeah, the auctions are competitive. People are paying big prices, but it's not like it was in 21 yet. I think we're steadily progressing back towards that level.
How much is activism playing a role here in pushing some of these transitions to the surface?
It's a great question. Activism is as busy as it has ever been, and M&A is a theme in over half the campaigns. Now, it's not always pro-M&A. Sometimes it's why'd you do that deal and let's unwind it. But activism is one of the drivers of M&A as we look forward.
Mark, we have to leave it there. Thank you so much for your time. That is Mark McMaster, Lazard's Global Head of Mergers and Acquisitions.